Hey everyone, it's Zach, also known as Trading Aloha on Twitter. As we continue to navigate this bear market and focus on staying on the lookout for up and coming games on Avalanche, I think it's important to highlight some of the red flags that I look for when I'm evaluating a new project before I decide to take a deeper look. I think it's incredibly important, regardless on if you're a player or an investor, to take a look beyond the surface of the game's website or the team's social media before putting your money in. Hopefully, some of these ideas and examples can help add to your own evaluation process. The first one for me is simple, and it's lack of transparency. I think a reputable project in 2022 and 2023 at this point should clearly disclose information about its team, its funding, the development process, and have a very clear and easy to read roadmap. Any game or project that has a lot of vague or secretive descriptions about the details of what they're trying to do, how the game's going to progress, who the members of the team are, is an immediate red flag for me and something that I will absolutely avoid unless there are hundreds of other reasons that say I should continue to invest or look into this project. In 2022, 2023, we've seen so many, anonymous projects just basically rug completely or slow rug until there's just nothing left. It was a big issue back in 2017, 2018 with the ICOs, and I think we saw that peak in GameFi in late 2020 and into 2021. So I think going forward, if we want to make Web3 gaming a real thing here and it wants to continue to grow, you're going to have to no longer be anonymous if you're on at least the main part of the team. There's got to be some sort of accountability for what's going on inside the game. So as an example, I think there's a few that we could look to on Avalaunch that are clear red flags that we would have seen in 2021, but it was towards the end of the bull run and people weren't really paying attention. So I'll just show one of those examples real quick. So if you've been a long-time member of Avalanche, you'll know a lot of these games that were kind of Wolf game clones. That Wolf game was a game that started and still going on Ethereum. That was cloned and brought over to Avalanche. That was moderately successful when it launched, but basically just kind of dried up into nothing. And since then, there have been at least 10 to I think 20 of these type of clones that were all basically the same game, but just changed it instead of wolf and sheep to police and robbers. And at one point, this game came out called Grand Theft Bacon, which initially launched and was successful, but basically it was just a race to zero, as many of the other ones were. So if you go on the same theory of lack of transparency, and we just click on the team to see who they are, we're brought down to just no Twitter accounts, basic names that are just totally randomly generated with some image. There's nothing about them. There's no way to figure out who they are unless you really had inside information on some of the team members and previous projects that they've built, and you can figure out your way from that. So this is one that I would immediately steer clear of. There's just not a lot of information of who they are. Even if you go down to the FAQs, I hate seeing, is this a rug? Obviously, it became a rug. Whether you want to classify it as a slow rug or not, that's up to you. They claim to be a relatively short project, and then they're going to continue to build out an NFT Worlds phase 2, which never happened. So that's just one example of when they say, if you read the surface level, you say transparency, they keep themselves up to date, they take their community seriously. It's just something that without more detail and figuring out exactly who these people are, even if you even go into the white paper itself, it has some decent information in here, but as we'll mention some of my other red flags that I look for, there's no information on how the token's vested, who was given tokens prior to the generation of the token, and how it's going to be used, where the liquidity is coming from, where the treasury is. There's just no information in here beyond just basic info on the game and how it works. But it's basically just sucking you in, and they're going to take advantage of that and dump on you all the way to zero and then disappear, which they basically did. So on the transparency part, I look for non-anonymous teams at this point, or at least a couple of founders that are doxxed and have a history of delivering at least successful projects or being invested within the ecosystem for a long time. The next one for me is a minor one, but it's overly kind of straightforward. It's overly ambitious or unrealistic goals. While it's important that there's you can differentiate between having ambitious goals and being ambitious. I think at some point you realize that some things aren't sustainable. and some things are just not possible given a quality and realistic model, such as the time project where you could make hundreds of thousands of APY in under a year, but it's just based on using other people's money coming into the system over and over and over again. And if there's no more buyers, then the project immediately tanks to zero, or goes towards zero rather quickly. And it's just, everyone who got in before all that marketing was done was the ones that had the decent returns, and they just dumped on people who came in late. So just, if something sounds too good to be true, it probably is at this point. My overall goal in Web3 gaming isn't to make a ton of money. It's to have, the games be enjoyable. And if that results in making some additional income on the side, I don't expect it to be much. If we want Web3 to succeed, there's got to be sustainable. And, as they say in life, if something sounds too good to be true, it probably is. So if you think you're going to make, like $6, $7, $8, $9, $10,000 a month off of a $20 investment for years and years to come, it's not going to happen. So just be, aware of what the team is stating that the returns are, and if their focus is on, what your returns are going to be, it's not going to be a sustainable game. I'd much rather see a team that's their ambitious goal is to, become the top game through, acquiring more players, marketing, becoming an esports game, and less on how much each individual player can possibly earn. And so that moves me into really number 3 and number 4 for me. And it's a couple of things combined. It's the token supply, the token burn, and the token vesting. Before we kind of move into that, just throwing up some key terms to understand as we kind of walk through exactly what I look for when I'm looking at, the tokenomics initially, as far as, how it's distributed, and then how it's unlocked to avoid potential issues in the future. When you look at, some of the examples on CoinMarketCap or CoinGecko, you'll see these terms listed out. And just as a quick definition for those that might be new to the space, the token supply is the total number of tokens that are in circulation. The total supply is the total amount of tokens that will ever exist once they are all distributed. The market cap, which we'll show here kind of on a CoinMarketCap example, is the total value in dollars of the tokens that are currently in circulation right now. And then, of course, after all the tokens are in circulation, what is the fully diluted value of the token? So we'll take a look at that real quick. So kind of using Snail Trail as an example, because I really do like how they break out their information in their white paper, and I think we're going to use that as an example kind of going forward. Looking at their CoinGecko page, you can see the total supply and the max supply, as well as the fully diluted valuation, and it gives those tooltips on CoinGecko to tell you exactly how you can get there. The issue with a lot of the Avalaunch tokens is that there's not a lot of data, and CoinGecko doesn't do a good job of pulling some of the historical information from these tokens. So a lot of the tools you really can't use on CoinGecko, such as the Tokenomics, which they are starting to introduce, where it'll show you exactly how the tokens are distributed and how much the team got, how much early investors got, what was used for the public sale. Once this becomes a little bit more popular and a lot more data, it'll be a lot easier to kind of do a quick analysis of the token without having to go to other websites. But you can see kind of all the the main things that are missing here, like market cap, circulating supply. But the good news is that you can find that if you go on Snowtrace. So if you go on Snowtrace, you can see the same information. You can take the contract info either from the white paper, or you can go to CoinGecko and take the contract that's listed there, dump it into Snowtrace. It'll bring you up and tell you the token is Snail Trail. It'll show you the fully diluted market cap, as well as the total supply. You can quickly see how many holders there are, how many transfers. You can see if you go on to holders, and you can even pull up the token holders chart, and it'll break down exactly which wallets hold the most. And a good way to kind of look at these is you can see that 41.5667% is held by one address, and another 16% is held by another. If you go into usually the team's white paper, more often than not, these will correspond to either like a rewards wallet or something that's locked up, and you can do that by Snail Trail does a great job. So if you kind of look at here, you've got 96738, and if you go try to find 96738, you can see that the largest are held in the rewards vault. So this is all the rewards for people playing the game. So that's not a red flag for me. Now, if it was, the team's wallet or one individual wallet who bought early on, this would concern me because someone holding 41% of the tokens is going to limit the ceiling and could easily dump on you if there's any sort of quick price move. And then if you look at 3FFF is the other big holder with 16%, and I believe I looked that one up earlier. It is the team and advisory wallet, which is locked up for a period of time, which we'll kind of talk about later. So I like to see that as well, just to keep an eye on exactly what is going on with the tokens, if they're moving around, and who they're moving to. So this checks the block for me. I like to see the largest part being a rewards wallet for the team, and then the other kind of walking down are funds that are locked up for a period of time. And then one thing that you kind of have to look a little bit further on within the white paper is a token burn. Is there any way that the team has come up with to burn some of the tokens to take them out of the supply, which will help lower the supply and of course increase the demand? If the game continues to develop and gets popular and more people come in, there'll be less tokens in circulation, so therefore should appreciate in value over time. And again, using Snail Trail as an example, they've come up with a ton of different ways that they're introducing to kind of burn slime to follow that route. And you can see that in our last video update we did on Snail Trail last week. A couple of those have just recently been released. So I hope to kind of keep an eye on this to see how that plays out over time, because since the bull run in 2021, we haven't really had a chance to see how GameFi moves from a bull market into a bear market, and watch the team introduce new mechanisms and levers to burn some of these tokens to increase the demand. And if we do hit that next bull cycle, whether it be in 2024 or later, does that pay off, and do we see the game continuing to develop, the developers continuing to increase the exposure of the game, more players coming in, and then those that have been supporting the team and playing the game, do they see their tokens appreciate over time? So we'll see how that works. So to kind of bring that all together, for the initial token distribution, I kind of look for a couple of things, and this can fluctuate depending on what the game is, and if everything checks every one of these boxes, but one thing's a little bit higher or lower than I'd like to see, I'll just make a note of it as I go along. And then, if there's other red flags, I'll put that into my final analysis to see if one area is having more exposure than another is something that, would justify me not playing or investing in the game, or if it's something I can overlook if it's just a couple percent. So, when you see the tokenomics of a new project, usually in their white paper, they'll break out exactly, how the tokens are being distributed. And usually it's, broken up in some way that looks like this, whether it be just numbers, just with percentages, or it'll have an amount of tokens, or there'll be, charts and graphs to show exactly how much is going to what. But for me, what I look for is the team having, about 15% or less to show, that they're invested in the project, but they don't hold so much of it that when it comes time for unlock, that they could cause a massive price dump on holders. So 15% or less. Same with advisors. I like to see about 10% or under. Early investors under 25%. I like to ensure, if you get too little and they try to cap it around 5 or 10%, you might not get the investors you need to fund your project. But again, if you're over 25%, you're just basically, be very wary of how the lockups are and how many coins or tokens are going to become unlocked at once, if this is an area that goes over what you're expecting. Public sale, I like to have under 10%. Same with marketing. We haven't seen a lot of marketing done from GameFi projects yet. So if it's over 10%, I don't know what they're going to spend that money on. So I just like to see that pretty small, under 10%. Ecosystem, and that's everything from airdrops, staking rewards, how players basically get that, some of those incentives back to them. So I like to see at least 10% here, and as we saw kind of on Snail Trail, it's much higher than that, which is great. The treasury, I'd like to see at least 15%, and that can vary. I think that can even go down to 10%. The treasury being, how they can pay the salaries of the team and keep the game funded. on the development side. So at least 15% is what I'd like to see, but I've made exceptions before, down to 10%. And then on the liquidity side, making sure that there is enough in there, but not too much, where they can keep the liquidity pools and everything running with no issue for as long as the game needs to go. So that's really it on the distribution side, and we can see that as well. I'll kind of show this again on the Snail Trail white paper because I really like how they broke this out. So if we take a look at Snail Trail again, looking at the ideal tokenomics that I try to look for overall, you can see it kind of matches up pretty well here. If you look at the team, ideally I'm looking for 15% or less, and you can see it in their white paper. It says the team's got about 12% of the tokens. Advisors are less than 10%, which is good. The early investors, which is made up of the private sale, they only had 16.8%, and I was looking for under 25%, which I like. The ecosystem, which is rewards, airdrops of at least 10%. We can see the rewards here are at 48 and airdrops are 2%. So you've got almost 50% as the ecosystem for rewards and all that other stuff. Treasury, it's down there at 3%, but I don't think that's big of a deal. I like the treasury and like larger projects and major token releases as opposed to games. So I'm okay with this as well being this low, because I think that it's fine. And then liquidity at 8.2% I think is a good number for this game as well, especially with them introducing different ways to burn the slime token. I like how this lines up. So for me, this definitely checks all the boxes of what I'm looking for, with the majority of the tokens being focused on the rewards for the players and not so much to the team and early advisors. So that all lines up. So that'll kind of flow into the last thing I look for, which is vesting. And so the last thing I kind of look for as a major red flag is if there's short vesting periods, or if the token unlock schedule is really condensed, and we can see a lot of the early investors, the team, the VCs, or whoever had access to those tokens being able to sell or dump their tokens really soon after launch. And anything under 12 months is what I consider really soon after launch. So it's really important to pay attention to this in the white paper. You're looking for, at least a 3-month cliff period, and ideally you'd want to see over 12 months and ideally over 24 months for those tokens to vest. And you got to pay attention to the white paper, because I've seen in, a couple of white papers over the years that they'll stretch their charts out to make it look like the timeline's really long. But in actuality, if you look at, the legend and how far actually out the timeline is, it's only like 6 to 12 months. So just make sure you're paying attention. Just because the chart is stretched out doesn't necessarily mean it's a long time. So we'll take a look again. I think Snail Trail does a good job here. So an example of what I'm looking for when it comes to vesting. And then as you can see kind of in the Snail Trail document as well, within their white paper, they do a great job of laying out the type, the unlock plan, and they even put the TGE date as 2 May 2022, which is incredibly helpful, because sometimes you got to go back to Coin Market Cap or CoinGecko to see when the TGE date was, and sometimes it's harder to find. But it's great that the team included that in the white paper and kind of went above and beyond what the normal standard is for listing that. So this is why I love to use them as an example, because they really kind of went above and beyond as far as laying out both the distribution and the unlock, as well as the TGE date, and listing the public sale and the private sale price for the slime token. So, taking a look at their unlock plan, you've got their private with an 18 months vest with 6-month cliff, which I think is fine. Over 12 months is what I'm looking for, and they hit it at 18. The public, which is okay, because that's just the public sale, 6-month vest with a monthly release, is fine. The team and advisors, we see a 2-year vest, which is great over the 12 months that I'm looking for, and ideally I'd like to see it between 18 and 24 months or greater, which is great. So a 12-month cliff with quarterly releases, which is perfect. So they're not, dumping monthly. So, it's a long enough time for it to vest. They'll continue to develop the game, and then you can kind of, assess from there what the token's going to do each quarter. You've got, the rewards. You look at the admission schedule. The advisors are also on a 2-year vest. The treasury is on a 1-year vest with a 3-month cliff, and monthly unlocks for 9 months. That's fine. And then, of course, the airdrop is a 12-month cliff with discretionary unlock thereafter. So not a big deal. There was only, I think, 2% if we go back up for the airdrop. So it's not even that big of the overall supply. So not an issue there. So, those are like the biggest issues that I look for. And just to kind of recap for me, as far as red flags in GameFi, first and foremost is the lack of transparency. I look for a docs team, at least the founders and a couple of key players. I make sure that their goals are realistic and attainable. And then, of course, looking at their business model to make sure that their tokenomics make sense, as well as their vesting schedule. And then, kind of the last things I kind of wanted to touch on just briefly is just their community engagement. I think it's important now more than ever within Web3 that, we've got a team that's willing to listen and engage with the community. We see that in a number of games. Like Snail Trail does a good job. There's Pulsar, which does a great job at interacting with the community. The Battle for Geostone team does a great job of talking to people. And really any game that's launching this year or kind of towards the last 12 months, it's done a great job in kind of building that community. And I think that's important. If you're in a Discord or a Telegram or on Twitter and the team account just seems toxic, they just don't answer questions, it's just a big red flag for me. I think, if we're going to make, Web3 gaming a real thing and continue to increase the visibility and engagement, the team's got to be accessible and they got to be willing to listen to feedback. Whether they implement it or not is a whole nother issue. But at least taking the time to listen to their concerns, holding AMAs, talking to the players that, have been following the game for a long time and have questions, and willing to change things, if it makes sense for the game and makes sense for the community. So hopefully some of this has been helpful as far as, what to look for when you're initially evaluating a GameFi project. And it really can be applied in crypto and really as investing as a whole. A lot of these things, you can use in your everyday life as far as like investing and making sure, that you have a process that you go through to evaluate a project or a game or a token before you start putting money into it. If you have any questions, feel free to reach out to me on Twitter at Trading Aloha anytime. More than happy to talk and interact and kind of share additional tips and how I look at things and different tools that I use to kind of dig a little bit deeper on some of these topics as well. And, if you can, subscribe, like the video as well, that helps us continue to push out more game content. I can't wait to see what 2023 has in store. I think there's some great games on the horizon. And a lot of this we can kind of walk through as some live examples on some games that are coming up in the next year, which I hope to do within the next quarter or two. So thanks again. I hope everyone has a great time and a great week, and I'll talk to you soon. Bye.